Good morning, everyone. Paul Duncan here with GammaEdge. Today is Tuesday, the 22nd of March. Let's jump in. Little different presentation than we normally do. Based on feedback that I got from the group, going to split this up into two slides today and yesterday. So the next two slides will show the overall condition for the respective index or ETF, and you'll get a comparative here. You'll be able to look at this in some detail and see what's happening between what we call the wing charts, the net negative gamma condition as well as the net positive gamma condition. And when we see these numbers change, it gives us an idea of the day over day. So this should help you visualize what occurred yesterday projected into today. So for the SPX, not much of a change. For the SPY and for the Qs, as you will see, we have actually experienced significant gamma increasing here. Yesterday was an expiry day. You would expect numbers to go down net, and they did not. The fact that the red wing is bigger today than it was yesterday suggests that significant put gamma, was added to the complex. This is downside hedging, downside protection. So we typically don't sell off in a dramatic amount when that occurs. In fact, you will see we've colored this green, and you'll see why here shortly. So SPY is showing puts being added. If we take a look at the Qs, same story. We're seeing net negative gamma has increased and decrease in positive gamma. If you recall, we did have a monetization potential yesterday, and we think we saw that with this presentation. And you can also see here that the net negative gamma has increased also in the IWM. For that reason, we're coloring everything green. When we take a look at what is the edge in increasing net negative gamma and declining positive gamma, and we do it on the primary index ETFs, a measurable edge is definitely present, and you can see that the overall centroid of this distribution, these are trades, is to the right of the zero line. And if we take the 50 percentile across here, you can see where it intersects. A normal distribution is on the right hand side, and that gives us the confidence that there is a measurable edge when this condition occurs. The conditions for this test were basically shown here in the signal, and we just evaluate if we were to hold long after 21 days. Now, note there are some tails here on both sides, so you might want to put a stop loss in here at about 10 to 15%. It does slightly improve the intra-trade drawdown numbers, does not change the overall distribution in a significant way. We think we're at kind of a crossroads in the cumulative tick, the market model. This is incredibly important because we're potentially at a failure point where we could actually reverse down in the cumulative tick. Breadth is still very poor. We saw some with the notes yesterday from the FOMC with the Fed doing whatever they're doing. We saw some sell-off and then kind of a roll down of risk off into the afternoon. And that's evidenced here in the cumulative tick. That is a running number here. The fact that we're getting ready to cross into where we have historically failed will be a signal for us to protect gains and possibly go to the sidelines while everything works itself out. For that reason, we're going to add a yellow to the green. We are still biased upward, but we're watching this very carefully today. As far as the June ES contract, no real change. Note that VIX is it's coming down. It's pretty much in the range that it was yesterday. A continued decrease in the VIX will be constructive to the markets. I will note the ES is showing some fairly low levels in context of what we call the zeros. And we calculate both the gamma zeros and the delta zeros. These are price invariant. They're based on the overall structure. They don't really care about the overall price movement through here. So take these as absolute lines in the sand right now. Since we're above that, we are overall bullish, but with a little bit of cautionary that you see here. We're very, very close to this, so we're going to also keep the yellow light on here with an overall green. When we take a look at the vol, which is up here, the VVIX, and we take a look at the VIX, we're still dropping against that -1 standard deviation on the VIX, which is constructive. It's just there's nothing really here to play. We're not doing anything here from a gamma perspective, nor from a collapse of vol perspective. The move would have been up in this area here. You can see that VVIX continues to drop. We're going to give that a green light for the bulls. When we take a look at the SPX expiration, this is a picture of the overall gamma expiries for the next month. And I think it's important to note here that we've got a lot of positive gamma that is scheduled to come off. We're still seeing the JPM hedge obviously looming large here for the end of the month. There's some copycats out here also. The number is decreasing, but just slightly compared to yesterday. And we're starting to see more and more calls build out, which when we see calls build out and up, out in time, up in price, that is actually constructive. That is a positive gamma environment. We're above the zeros, as I just showed. So just be aware of that. You could get a monetization. We do see this growth here. This will be tomorrow and this will be Friday. You could see some monetization going on in the SPX, so just be aware of that. When we take a look at just the PM portion of the SPX, this does not include the monthlies. This is just the short-term weeklies. We consider these the little tugboats, where the SPX monthly is considered the super tanker. We're seeing, on balance, a lot of positive gamma out there. And even for the end of the month gamma expiry, you can see that these numbers are becoming more balanced. As these become more balanced on the call and the put side, that'll be very, very important for us. And we'll want to watch because this will be a monetization event, potential monetization event, and that could actually cause some volatility within the markets. But you can see how the distribution rolls out for the PMs, and we are net positive as we go out in time. That is generally constructive. We do have this event coming up, though, at the end of the month, end of the quarter, and we'll have to watch that. When we take a look at the net gamma by strike, you are here, 4461. You can see where we are in the overall position. We've gone ahead and labeled some of the key points here. 4600 is the dominant upside, 4100 is the dominant low side. You can see the JPM hedge here at 4510, the copycat at 4520, and the zeros are indicated here. I will note again that the ES is actually much lower here. Just be aware that the zeros do represent kind of our line in the sand. They are not necessarily what others call a zero, so just be aware the terminology is a little different. Visually, you can see that there's a zero here, and at the end of the day, that's what matters. So just be aware of that. So that'll wrap up today. We're going to put a green light on most everything here with some cautionary. Just want to watch what's going on here. If you're interested in more details, great group here at GammaEdge.us. That'll take you to a Discord sign-up page. Come on in, 14-day free trial. All the tools kicked on, a lot of dialogue going on, a lot of experienced traders showing what they're doing and how they overlay this with their systems. You can follow us on GammaEdges with an S on Twitter, and would like you to do so. Please like whatever we post so we can get hiked up in the search engines there. And of course, you're watching this on YouTube now. And so please like the video if you find the content useful, and follow us so you can get notified when we post new materials. Thanks, everyone. Make it a great week.